XRP just crossed the line no one thought it would this fast. And the silence from mainstream media is deafening. VivoPower, a Nasdaq-listed company, just announced it's launching the world's first XRP-based corporate treasury reserve. That's $121 million raised, not for Bitcoin, not for Ethereum, but to build a long-term XRP position on their balance sheet. This isn't a startup playing with crypto clout. VivoPower is a real public company, fully SEC compliant, with a boardroom making a strategic financial move. Let that sink in. XRP is now being adopted as a treasury asset, publicly, at scale, and in compliance. For years, people said XRP was just for remittances, that no real company would touch it because of the SEC case, that Ripple was too centralized, that institutions would only ever adopt Bitcoin. Well, guess what? That narrative just broke. Because VivoPower isn't speculating, they're signaling. And the message is loud and clear. XRP is ready for enterprise-grade finance. Why this is a big deal? This $121 million XRP treasury isn't some pump play. There's a strategic shift. VivoPower is allocating capital into XRP as a hedge against fiat erosion and as a functional reserve for cross-border activity, treasury diversification, and liquidity optimization. They're not doing it because it's trendy. They're doing it because XRP has matured. Legal clarity in the US, on-chain liquidity through RippleNet and ODO, enterprise-grade custody auctions, real-world traction in Asia, LATAM, and MENA, a rebounding market with XRP trading above $2.20 as of today. This is the kind of corporate move that turns heads at the institutional level. Because once one company does it, others start asking the same question. Why not us? MicroStrategy did it with Bitcoin. VivoPower's doing it with utility. When MicroStrategy put Bitcoin on its books, it changed how CFOs thought about corporate treasuries. Now VivoPower is doing the same with XRP. But this time it's not about digital gold. It's about infrastructure. XRP isn't a hedge against inflation. It's a solution to outdated finance, fast settlements, fractional costs, global compliance, Ripple's growing banking partnerships, stellar liquidity rails. This is a treasury move built on utility, not hype. And that changes everything. Stopwatch, why now? XRP isn't at the bottom. It's rallying. So why would a company jump in now? Because real institutions don't wait for price dips. They wait for regulatory green lights, infrastructure maturity, and strategic alignment. And in 2025, XRP checks all those boxes. The Ripple versus SEC case is done. Clarity is here. Ripple is expanding its liquidity hub and custody solutions. The XRPL is powering real-world tokenization. And now you've got a Nasdaq company backing that entire ecosystem with $121 million to start. This isn't timing the market. This is owning the next phase of the financial system. The narrative has shifted. For years, XRP was the underdog, ignored, dismissed, FUD'd to death. But with this move from VivoPower, the tide just turned. XRP has now been publicly validated as a treasury asset. That alone flips the script on every crypto narrative. XRP isn't too centralized. A Nasdaq company just endorsed it. XRP isn't too risky. It's now part of a public balance sheet. XRP isn't just for payments. It's a treasury diversification play. And this is just the first public company. Expect more. A lot more. This is what institutional adoption looks like, not headlines but actions. VivoPower isn't betting on hype. They're betting on XRP's role in the financial future. And with $121 million on the table, they're not alone for long. The dam just broke. XRP is no longer the speculative outsider. It's becoming part of corporate finance, on-chain, on record, and out in the open. If you're here for XRP's next evolution, smash that subscribe button and hit the bell icon. Because in the next section, we're breaking down exactly how this XRP Treasury Reserve is structured and what it means for Ripple, the XRPL, and you as an investor. Everyone's talking about the $121 million, but no one's asking how it's being deployed. This isn't just a lump sum thrown into XRP. VivoPower's approach is engineered. And that's the part nobody's covering. Because this isn't a PR stunt. It's a structured entry into crypto capital management, with XRP at the center. This is smart capital allocation, not formal buying. Let's get this straight. VivoPower isn't buying XRP. They're building a treasury-backed reserve. That means capital is being raised in phases. Assets are being allocated over time, not all at once. Custody, compliance, and liquidity channels are pre-structured. We're talking financial engineering, not crypto speculation. VivoPower is designing this reserve the same way a company might design a debt facility, FX hedge, or sovereign cash instrument, except now the asset isn't dollars, yen, or gold. It's XRP. That alone tells you how far we've come. XRP is being treated with institutional-grade structure. Here's the foundation. Here's what we know from the filings and public statements. $121 million committed in capital across several tranches. XRP acquisitions to occur via regulated exchanges or OTC desks. Custody likely handled through enterprise-grade crypto custodians, think Fireblocks, BitGo, or Ripple's own custody platform. Integration with RippleNet and potential utility for cross-border treasury functions later in the life cycle. That last point is big, because this isn't just hold and hope. It's hold and leverage. This XRP reserve may eventually be used to settle vendor payments, transfer internal capital across jurisdictions, or stake into liquidity operations. This money that moves, not just money that sits. The multi-phase structure, how it actually works. VivoPower isn't dumping $121 million into XRP on day one. Instead, the strategy unfolds in 3 phases: capital raise and setup. Capital was raised through debt and equity instruments, SEC registered. This wasn't off the books. It's clean, compliant capital earmarked for XRP. Acquisition and custody layer. XRP will be acquired in controlled waves, minimizing slippage and volatility exposure. Custody is expected to be with regulated third parties that meet public company audit standards. Strategic deployment. Over time, the XRP reserve can be activated. Think FX hedging, liquidity provisioning, and even settlement use cases. RippleNet, ODL, or other XRPL-based mechanisms are on the table. That's not a HODL plan. That's a financial instrument in motion. This isn't just about XRP, it's about infrastructure. Let's zoom out. VivoPower didn't pick XRP just because the price looks good. They picked XRP because the infrastructure is already built. RippleNet for cross-border liquidity. XRPL for on-chain accounting. ODL, on-demand liquidity, for real-time settlement. ISO 20022 compliance for financial messaging integration. No other asset, not even Bitcoin or Ethereum, offers this kind of plug-and-play enterprise readiness. VivoPower's treasury team is essentially saying, why reinvent the wheel when XRP already has the rails? And that's the real signal here. This isn't just a treasury diversification play. There's a bet on XRP's architecture. From balance sheet to blockchain. Here's where it gets even more interesting. VivoPower isn't just warehousing XRP in cold storage. This is a live asset that may eventually connect to their operational cash flow, which means we're looking at the tokenization of corporate finance right here, right now. If the strategy scales, we could see vendor payments settled in XRP, intra-entity transfers across borders in real time, treasury rebalancing via smart contracts, on-chain proof of reserves, and don't forget this is a Nasdaq-listed company. That means quarterly reports. That means public disclosures. That means real-world XRP integration showing up in financial statements. Imagine a world where XRP reserve growth becomes a standard line item on earnings calls. We just got a preview of that. Strategic alignment with Ripple's long-term vision. Here's the part no one's talking about. This entire structure fits perfectly into Ripple's broader roadmap. Ripple's vision has always been to make XRP the bridge asset for global finance. For years, that meant working with banks, PSPs, and liquidity hubs. But now we're entering the corporate phase. Custody? Ripple's in. Tokenization? Ripple's already building it. Institutional payments? Ripple's expanding ODL corridors as we speak. VivoPower is step one of this next era, where corporations adopt XRP not just to hold it, but to use it. We're seeing the convergence of RippleNet, XRP, and enterprise finance. In real time, this isn't about a single company buying XRP. It's about a new model for corporate finance. A model where XRP isn't just a speculative token, but a strategic financial asset with utility, mobility, and real-time capability. VivoPower has laid the blueprint, and once that structure proves efficient, cost-saving, and regulatory compliant, other companies won't wait. They'll copy it. We're not just watching XRP adoption. We're watching the XRP standard for corporate finance take shape. Right now, XRP sits at about $2.28, a price level that's been volatile to say the least. Why? Because the market's caught between two big forces: ongoing speculation about regulatory clarity and the broader crypto market's roller coaster. Here's the thing: XRP's price isn't moving in a vacuum. It's reacting to whispers, filings, legal chess moves, and now to a closed-door SEC meeting on May 29th, the kind of event that can either catapult XRP into a new phase or keep it trapped under regulatory uncertainty. The regulatory sword still hangs over XRP. For years, XRP's biggest obstacle has been the SEC lawsuit. And while the case has been winding down, this May 29th meeting represents a pivotal moment. The SEC's stance on XRP's classification as a security or not is the single most critical factor impacting institutional appetite. Why? Because no major treasury or public company will put $100 million plus on their balance sheet without regulatory certainty. If the SEC signals safe, expect a flood of new capital, partnerships, and corporate treasury adoption. If the SEC stays vague or worse, doubles down on enforcement, that $2.28 level could quickly become a ceiling. Market sentiment: bullish but cautious. Despite the volatility, XRP's on-chain and trading data tells an interesting story. Whale wallets continue accumulating steadily. Exchange outflows are rising, signaling holders are moving XRP off exchanges, usually a bullish sign. Trading volume has spiked recently, especially after VivoPower's treasury announcement. XRP's daily active addresses are on an upward trend, suggesting increased network usage. All these factors suggest something big is brewing beneath the surface. Institutions are quietly stacking XRP while the broader market holds its breath. Macro market forces at play. XRP's current price isn't just about legal drama. It's also tied to global interest rate hikes affecting liquidity across all markets. USD strength dampening crypto inflows temporarily. Bitcoin and Ethereum market cycles, which tend to lead altcoins like XRP. Right now, Bitcoin is consolidating just above $28,000, while Ethereum hovers near $1,850. When these two move up decisively, XRP historically follows with outsized gains. But what's different this time? XRP's unique market position. XRP isn't just another altcoin riding Bitcoin's coattails. It's at the intersection of payments infrastructure, legal uncertainty, and institutional adoption. That mix creates both risk and explosive upside potential. Here's why. If regulatory clarity arrives, XRP stands to benefit more than almost any crypto asset. VivoPower's $121 million treasury announcement acts as a catalyst, proving XRP can serve as a corporate finance tool. Ripple's expanding partnerships with major banks in Asia, Latin America, and Europe add fundamental strength. All these forces can push XRP beyond the $3 barrier, maybe even $5 in the coming months. What's next? The future outlook. The next 60 days are crucial. We're expecting official updates from the SEC or Ripple-related rulings that clarify XRP's legal status. Continued institutional accumulation, especially from corporates
watching VivoPower's playbook. Expansion of RippleNet corridors and ODL corridors increasing liquidity. More NASDAQ-listed and public companies potentially announcing XRP treasury strategies. And here's the kicker. If XRP breaks past $2.50 with strong volume, we could see a parabolic move to $4 or higher,
fueled by FOMO and fresh institutional inflows. The bigger picture: XRP's role in crypto's next wave. XRP isn't just a price story. It's the story of crypto's evolution from speculative token to real-world financial utility. VivoPower's announcement and the regulatory buzz together highlight a shift from retail speculation to institutional use cases, from legal uncertainty to regulatory clarity, from price volatility to strategic asset allocation. This is a new chapter for XRP and potentially for the entire crypto market. If you want to stay ahead of XRP's next big moves, make sure you're subscribed and notifications are on. Because in the next section, we'll dive into Ripple's expanding ecosystem and how its infrastructure is quietly reshaping global finance, the broader implications for corporate finance and cryptocurrency adoption. VivoPower's adoption of XRP not only underscores confidence in the digital asset, but also sets a precedent for other corporations considering crypto integration, potentially accelerating mainstream acceptance and utilization of cryptocurrencies in corporate finance. So here's the deal. VivoPower's $121 million XRP treasury strategy isn't just another headline. It's a blueprint for how corporates will adopt crypto at scale. This move signals that XRP is no longer just a digital asset for speculation. It's becoming an integral part of corporate finance infrastructure, with regulatory clarity potentially on the horizon and Ripple's ecosystem expanding fast. XRP's next price surge could be bigger and more sustainable than ever before. This is the kind of institutional momentum that moves markets, quietly at first, then all at once. If you want to stay ahead, stay sharp, and be the first to know when this story unfolds further, subscribe to Be Crypto Smart now. Turn on notifications because we break down these shifts before they hit mainstream news. Stay smart, stay crypto savvy, and I'll see you in the next video.